Your home insurance policy exists to protect you. That is what it says on the document. That is what the salesperson told you when you took it out. What the document does not tell you, what the salesperson was not required to tell you, is that every stage of the claims process contains a mechanism that can reduce, delay, or eliminate your payout. Not through fraud, not through small print that nobody reads, through entirely legal processes that your insurer uses routinely and that most policyholders encounter for the first time at the worst possible moment. The average UK home insurance claim takes between 6 and 14 weeks to resolve. Approximately 1 in 5 claims is either partially or fully declined. And the most common reason for rejection is not that the damage was not covered. It is that the policyholder did not understand what covered actually meant when they signed the policy. Today, we are going through every stage of a UK home insurance claim, what happens at each stage, what your insurer is looking for, and what you need to know before you need to know it. Stage 1. The moment something goes wrong. The pipe bursts at 2 in the morning. A tree comes through the roof in a storm. The ceiling collapses after weeks of water ingress. Whatever it is, in this moment, most UK homeowners make the decisions that determine whether their claim succeeds or fails, without realizing what they are doing. The first decision is whether to call your insurer immediately or deal with the emergency first. The correct answer is to do both at once. Your insurer's emergency line exists precisely for this moment. Calling it immediately creates a time-stamped record of your claim. It also activates your policy's emergency assistance provisions. Most comprehensive home insurance policies include emergency cover for temporary repairs, emergency accommodation, and emergency tradespeople. Many policyholders do not know these provisions exist. They often pay for emergency repairs out of pocket and try to claim the cost back later. Some succeed. Many do not, because they cannot demonstrate that the expenditure was necessary, an emergency, rather than an elective improvement. The second decision is documentation. In the first minutes and hours after damage occurs, the evidence is at its most complete and most compelling. Photographs taken immediately after the event are more valuable to a claim than photographs taken after temporary repairs have been made. Video showing water actively entering the building is more valuable than a dried-out ceiling 3 days later. Most people photograph the damage after they have attempted to manage it. They should photograph it before. Every homeowner who does this correctly has a stronger claim than every homeowner who does not. The fix at stage 1 is free and takes minutes. Photograph everything before you touch anything. Call your insurer's emergency line immediately. Write down the time, the date, and the circumstances of the damage in a message to yourself. These 3 actions take less than 10 minutes, and they are the foundation of every successful claim. If you are new here, hit subscribe now. Every week, British Home Secrets reveals the knowledge they buried, built specifically for UK homes. Now, let us get into this. Stage 2 begins when your claim is formally registered and your insurer appoints a loss adjuster. A loss adjuster is an independent professional, or more commonly a professional employed by or contracted to your insurer, whose job is to assess the validity and value of your claim. Most policyholders believe the loss adjuster is there to help them. The loss adjuster is there to protect the insurer's financial position. That is not a conspiracy. It is the job description. Understanding this distinction changes how you interact with the process. The loss adjuster will visit your property. They will ask you questions. They will take their own photographs. They will inspect the cause of the damage as closely as they inspect the damage itself. They are looking for evidence that the damage was sudden and unexpected, which is the standard for a covered event under most UK home insurance policies, rather than gradual and progressive, which is the standard for a maintenance failure and therefore excluded. The difference between a covered event and an excluded event is often a matter of when the damage started, rather than what caused it. A pipe that burst in a single event is covered. A pipe that has been slowly leaking for months and finally failed is not covered. The loss adjuster is trained to identify the difference. Most policyholders are not. There is something else the loss adjuster is doing that most policyholders never notice. They are assessing the maintenance history of the property. Not formally, not with a checklist, but through observation. A loss adjuster who sees evidence of deferred maintenance, peeling paint on external woodwork, cracked pointing in the brickwork, or gutters visibly blocked, is building a picture of a property that has not been maintained to the standard a reasonable homeowner would maintain. This picture can be used to support a finding of gradual deterioration rather than sudden damage. It is subjective, it is contested, but it happens routinely. The most effective counter to it is a maintenance record, evidence that you have been maintaining the property. Receipts for gutter cleaning, invoices for roof inspections, photographs of the property in good condition taken before the loss event. Most homeowners have none of these. The ones who do have a significantly stronger position at Stage 2. At Stage 2, you have the right to be present during the loss adjuster's visit. Exercise this right. You also have the right to ask the loss adjuster what they are assessing and why. Document everything they say. If the loss adjuster identifies a cause of damage that you believe is incorrect, you have the right to dispute it in writing within the claims process before any decision is made. Stage 3. The assessment comes back lower than you expected. Stage 3 is the stage where most policyholders first feel that something has gone wrong with their claim. The loss adjuster has made their assessment. The insurer has made an offer, and the offer is significantly lower than the cost of the actual damage. This is not unusual. It is, in fact, the expected outcome of the standard claims process for a majority of UK home insurance claims. Here is why it happens. Your policy contains a concept called the sum insured, the maximum amount the insurer will pay for a given category of loss. For buildings insurance, this is typically the rebuild cost of the property rather than its market value. For contents insurance, it is the declared value of your contents. If your declared rebuild cost or contents value is lower than the actual current cost, which is common because policyholders rarely update these figures annually as costs rise, you are underinsured. When you are underinsured, the insurer applies a calculation called the average clause, also known as the condition of average. This reduces your payout proportionally to the degree of underinsurance. If your home is insured for 80% of its actual rebuild cost, and you make a claim for £10,000, the insurer pays £8,000. The remaining £2,000 is your problem. Most policyholders have never been told about the average clause. It is in the policy document. It is not in the sales process. The fix at Stage 3 is to challenge the assessment in writing and to obtain your own independent quote for the repair work before accepting any offer. You are not required to accept the first offer. You are not required to use the insurer's preferred contractors. An independent quote from a qualified contractor provides the basis for a counteroffer. Keep all communication in writing. There is one specific action that addresses underinsurance permanently before a claim arises. The Association of British Insurers provides a free rebuild cost calculator on its website. It takes approximately 10 minutes to use. It produces a figure that represents the actual current cost of rebuilding your property from scratch. This figure is almost always different from the sum insured on your current policy, usually lower if the policy was set up several years ago and has not been updated. Updating your sum insured costs nothing and takes a phone call. Not updating it costs you a proportional reduction on every future claim. Most UK homeowners have never checked their sum insured against the current rebuild cost of their property. The calculator exists. Insurers know about it. Nobody is required to tell you it is there. Stage 4. The claim is disputed or partially declined. Stage 4 is the stage where the insurer has either declined part of the claim, declined all of it, or made an offer that the policyholder believes does not reflect the actual loss. This is where the majority of policyholders give up. They accept an inadequate settlement because the process is exhausting, because they need the money to start repairs, and because they believe there is nothing more they can do. There is significantly more they can do. The first mechanism is the insurer's internal complaints process. Every UK insurer is required by the Financial Conduct Authority to have a formal complaints process. A complaint formally submitted in writing triggers a regulated timeline. The insurer must acknowledge the complaint within 5 business days and provide a final response within 8 weeks. During this period, the claim cannot be quietly closed. The insurer must engage with the specific grounds of your complaint. Many disputed claims are resolved at this stage without further escalation, because the formal complaint process requires the insurer to review the claim at a more senior level than the initial assessment. The second mechanism is the Financial Ombudsman Service. If the insurer's final response does not resolve your complaint, or if 8 weeks pass without a final response, you can refer the complaint to the Financial Ombudsman Service, free of charge. The Ombudsman has the power to require the insurer to pay your claim, to increase a settlement offer, and to award additional compensation for the distress and inconvenience caused by the handling of your claim. In the year to March 2025, the Financial Ombudsman upheld complaints against home insurers in approximately 40% of cases that reached a formal decision. 40%. 4 in 10 policyholders who escalated a disputed claim to the Ombudsman received an outcome in their favor. Most of them had been told by their insurer that their complaint had no basis. Stage 5. The rebuild begins, but the problems are not over. Stage 5 is the point that catches policyholders who have successfully navigated the claims process, but who have not understood how the repair process works. The insurer has agreed the claim. The settlement has been paid, or the preferred contractor has been appointed. The work begins. And then something happens that nobody warned you about. Your insurer's preferred contractor is not your contractor. They work to the insurer's specification, not yours. The specification is the minimum required to restore the property to its pre-loss condition. It will restore the property to the condition it was in before the loss occurred, not to a better condition, and not to current building standards if those standards have changed since the property was built. If your kitchen was in poor condition before the water damage, and you had hoped the insurance settlement would allow you to upgrade it, the insurer will pay to restore the poor kitchen, not to improve it. If there is asbestos in the wall cavity behind the damaged plasterwork that was not previously known to exist, the cost of its removal is not covered by the original claim. It is a new and separate matter that needs to be assessed and agreed separately. Record every conversation with every contractor. If the contractor's work does not match the agreed specification, document the discrepancy immediately and raise it with the insurer in writing before the contractor leaves the site. A defect, identified after a contractor has completed and left, is significantly harder to remedy than one identified during the work. Stage 6. The renewal arrives. This is where most people lose the most money. Stage 6 is not about your claim. It is about what happens after your claim. It is the stage where the insurance industry recovers a significant proportion of what it paid out through the renewal process. After a claim, your insurance premium will almost certainly increase at renewal. This is standard and legal. The insurer has updated its risk assessment of your property based on the claim history. What is not standard, and what most policyholders do not know, is that the increase at renewal from your existing insurer is almost always larger than the increase you would face switching to a new insurer with the same claim history declared. The insurance market prices risk differently from your existing insurer. Your existing insurer prices renewal on a retention model. It knows most customers do not switch, and it prices accordingly. A new insurer prices your risk on the open market. Research by the Financial Conduct Authority, FCA, found that loyal home insurance customers in the UK pay, on average, significantly more than equivalent new customers. The loyalty penalty in home insurance is one of the most documented and least acted upon financial behaviours in the UK. Since January 2022, the FCA has required insurers to offer renewals at prices no higher than the equivalent new customer price. In practice, enforcement of this rule is imperfect, and comparison shopping at renewal remains the most effective protection. You now know that 1 in 5 UK home insurance claims is partially or fully declined. You know that photographing damage before touching anything and calling the emergency line immediately are the two most important actions at stage 1. You know that loss adjusters work for the insurer, not for you. You know that the average clause can reduce your payout if you are underinsured. You know that the Financial Ombudsman Service is free and upholds 40% of escalated claims. You know that your insurer's contractor works to a minimum specification. And you know that switching at renewal after a claim is almost always cheaper than staying. Your policy document is a contract. Know what is in it before you need to use it. This is British Home Secrets. We find the knowledge they buried, and we give it back to the people who need it. Subscribe, because there is a lot more where this came from.